Welcome back, ladies and gentlemen. Prediction markets are rapidly moving from niche curiosity to one of the most discussed opportunities in trading infrastructure. As event contracts gain traction globally, brokers, fintech firms, and exchanges are beginning to ask serious questions. Is this the next major product category? How close is it to regulator betting? And what role should retail brokers play in this emerging ecosystem? In this session, we'll explore the business models, regulatory perspectives, infrastructure requirements, and growth expansion surrounding event contracts and prediction markets in 2026. Ladies and gentlemen, the future gets interesting right here. Please welcome our moderator, Jakub Ross, CEO of For Traders. Jakub, the stage is yours.
Thank you, Duška. Okay, so hello everybody. My name is Jacob. I'm CEO of For Traders. We are a prop trading firm, so I will just briefly introduce myself, and then we will start a discussion about prediction markets. So For Traders is a prop trading firm which is offering multi-asset trading on CFDs, crypto, futures, and prediction markets. We were actually the first prediction market prop trading firm. We introduced prediction markets 2 months ago, and so far we have already 15,000 people who tried prediction markets trading in a prop trading environment. Which is a little bit different than in a live, real environment. And we already have some data from it, and that's what I want to talk about today with other panelists and share it with you. First, I would ask everybody to introduce itself. So please, Jerm, yeah.
Hi, my name is Jordan. I lead up Asia or Southeast Asia for FireWallet. FireWallet is a tokenized platform where you can purchase gold as low as a single dollar. And on the side, I help Access as well, which is an association that helps with crypto and digital assets.
Hi everyone, I'm Associate Professor Edward Tay. I'm the Head and CT of the Executive Education. So Asian Institute of Digital Finance, we are actually funded by MAS and National Research Foundation. We work on the problem statements for all the financial institutions. So we use artificial intelligence, cybersecurity on all the digital assets. Happy to share today.
Hi everyone, I'm Leon. I'm the CEO and founder of Play. Play is a technology infrastructure for prediction markets, offering a platform for trading predictions, exchange access, and the CFTC regulated environment in US with exclusive partnership with Crypto.com.
Okay, so to start, is prediction markets a hype? Will prediction markets be here with us within 1 or 2 years? That's the question.
So for me, this is definitely not a hype. This product is an amazing product that is easy to use, gives accessibility for traders to come on board in very different spectrum of markets. And we can see that this is no longer a hype in terms of the growth and continuous growth in tens of percents month over month. So I think it is here to stay.
Yeah. For me, I think prediction markets will grow even bigger. It is not a hype, because I think over years ago, as a techie, we were really working on very different elements leading to the predictions. For example, digital analytics. And these days, using AIs, we're able to churn out a lot more demos and POCs to actually test out all the application before we actually have a chance to go live, which is likely to be in the next few months.
So I think the deeper question to ask, right, is like 15 years ago when people talk about Bitcoin, they're like, oh, what's this? And then 5 years later, people are like, oh, wait, this is actually digital money, right? And then now Bitcoin becomes something that people understand, people know how to use it. And it's similar to how prediction markets are, right? It's changing how the way people, I would like to say, bet on certain events, certain outcomes, or certain things that's happening within the world. I don't think it's a hype, but I think there will be at some point, people will start to like, okay, this is going to be something that regulated exchange will start to accept, which already happened with Coinbase, Crypto.com. And I think sooner or later, when it starts to expand outside of the US, then in this regulated markets in Southeast Asia, then maybe that's where the boom is going to come in.
Yeah, I will have a different opinion than all of you three. I actually think that right now it's hype. Maybe similar as other topics which are hyped right now, but and I'm like really the person who is into every hype actually. That's why we back in December actually decided that we will build the prediction markets for prop trading as soon as possible, and that we will be the first one, and we did it. But right now, from the real data, from the real traders, 15,000 traders, I can see that from our experience, I think that right now it's hype, and I hope that the product will grow within the next months or years to the much better product than it's right now. I think that it's in this very early stage as every other technology or everything else which become new thing. Maybe we can compare it with, I don't know, autonomous driving. Everyone is saying, hey, it's hype, but I still think that autonomous driving is the most is the feature which will involve the evolve the world the most, because it will change basically everything. But right now, I think the prediction markets are a hype because it's not that much usable for a lot of use cases. Actually, about the use cases, I would like to talk right now because from our data, we can see that more than 50% of the events on the prediction markets is sports. That sports is one of the most tradable events. The second category is crypto. It's another 40% of the events. And then only the last 10% is dedicated to all other categories, whether it's politics or climate or basically everything. And if we count the markets which has some traction, let's say some trading volume, which from my perspective must be at least in hundreds of thousands of millions of dollars to be tradable for traders, then there is a very few events, actually tens or maximum few hundreds of events per day. Right now, in this moment, we have around 550 tradable events with trading volume over $100,000 on Kalshi.com, which is one of the providers for prediction markets. Leon, I think you can share with us your view because you partner with Crypto.com. There is different liquidity, probably smaller than on Crypto than on Kalshi. But from a technology provider, how your clients actually and then the clients of these clients are using prediction markets, and which categories are booming and which categories are best to trade on the prediction markets, and what's your take in general on the segments of the markets?
Sure. So in my perspective, first of all, speaking about volumes, this market grows a lot, but still it's tiny in terms of other financial markets.
It's very early, exactly.
Very early. So all market in April was about $30 billion. This is nothing compared to financial markets. So yes, there is limitation in liquidity, and there is a limitation of assets that are able to be traded in a deep liquidity. And the very fun fact about it is the amount of events. There is a lot of events, and it triggers an interest of traders to come on board. Sometimes liquidity is missing. Regarding the interest of users, so we see it very differently in US and outside of US. US is controlled, dominated by sports. It's 85% sports currently. The crypto segment, as you mentioned, growing. And this is the big catalyst of volume. 5 minutes crypto, now it's becoming also 5 minute different type of assets, including FX and commodities, which is again exciting with everything happening in commodities. The thing that we think will shift over time is the ability that those markets coming for more financial products will take more position as an alternative way to trade financial decisions into a very simplified way to execute on them. And that could be a big thing in predictions. Outside of US, sports is smaller. Sports is about 55% of the volume. So the other markets, and if we take them, so financials would be the biggest market after sport, and all others, as you mentioned, are great, they are fun to see, they are fun to participate, but they are not deep liquidity markets.
What do you guys think about the long-term events, like will Elon Musk land on Mars in 40 years? Would you bet on that event, and what do you think about this kind of categories?
Maybe I can share a little bit more of what we do over in one of the top institutions. NUS, we rank number 3 in terms of data science globally under the QS World Ranking 2026. So to give a bit of flavor, So I think right now, as what our gentleman mentioned, that the liquidity over here is really very small. I sit as a board member under the ICMA, International Capital Market Associations. So our members are trading about 14 trillions worth of bonds and debts and repos. Compared to that, this is really a fraction. But I lead especially on the fintech side of the whole thing, which actually prediction is something very interesting that we are trying out at the sandboxes. So even at tradings for bonds, all right, big ticket items, more financially incentivized, we are looking at two big challenges. One big challenge is our problem is less of liquidity. Our problem is more of technologies. AIs right now have exacerbated the amount of data that's available for everyone. And for us to actually, the traders these days have to be armed with supercomputers. It's not only just laptops, right? How we are looking at, we have these simulations in our schools itself, where some are being armed with data centers and some are just with servers, even with GPUs. What we find that actually in terms of latency of 0.01%, actually there is a big difference in terms of the predictions, accuracy, and more so, even if you are more accurate, you're not able to do that transaction, it is still worthless. So prediction without execution for us is meaningless. So we're looking at this at a very different levels. Of course, we are doing this, purely not to commercialize this, but really just to try out and expense the amount of technology and research for most of the commercial players to really ride on.
So maybe on a personal note, right? I think like prediction markets are not available here in Singapore. I mean, for very good reasons as well. Online casinos are not available here. But then again, if someone came to me in a bar and said, like, hey man, I'm gonna bet you $10 that Elon Musk is gonna land on the moon in 40 years. The problem I have is like, okay, how am I gonna find this guy in 40 years time, right? But then if you have something like on the blockchain, I think settlement can be done really quickly. I don't have to go and get this guy's number, worry that this guy disappears in 40 years, right? I think that's a bit of a game changer. But then again, depends on how regulation and how the resolution is gonna be, right? Like, if it goes around Mars but doesn't land, does it?
But still, someone must resolve the event in 40 years. So there is still that layer.
Yes.
Who knows, if Calcio or Polymarket will be here in 40 years.
The great thing about self-custodial prediction markets that it's democratized. So you have a lot of participants that can actually come to a resolution whether it happened or not. But 40 years is a long time.
But what will happen, if there won't be a Calcio or Polymarket in 40 years, and your money are locked in some smart contract, right? So how will you get it without the resolution who will unlock the money?
By the way, the way many exchanges over blockchain manage this is they have a threshold that if something happens and resolution cannot come to a conclusion, which is done by oracles on blockchain, it will just return the funds. So it happens today, that if something happens and there is no resolution, funds are just returned to the wallets.
From our data, from the last 2 months, when we introduced prediction markets to our trader database, for context, we have around 150,000 traders at 4Traders platform, so it's already quite a big data source, and 50,000 of them tried prediction markets. 80% or 85% of them are trading only crypto events, and mostly the 15 minutes recurring, crypto events. Which is event like what will be the Bitcoin price in the next 15 minutes. From the experience of our users and from the feedback which we are getting, around 90% of them are churning. Basically, they tried prediction markets because it's a hype, but then they don't see any reason why trade prediction markets, crypto and prediction markets, and not on the normal charts, on the CFD or on the crypto exchange, on the spot or somewhere else. Because they are traders, right? They want to analyze charts, they want to see some patterns, they want to have some edge. And actually, they are not converting to be long-term customers of prediction markets. So far, that's our feedback from our traders. So what's your take on this? Do you see there space to operate these, especially these short-term events on financial products like crypto, when there are exchanges for a crypto and you can trade it basically in much better way with more features, with different type of leverages, and CFDs and different I don't know, futures contracts and etc.
My take on this, that the structure of a binary contract that is traded between peers and market makers has that unique quality that 5 minutes is one thing, but it's allowed also for 20 minutes and daily. It, one, gives you some kind of ability to hedge around your book as a strategy, but it also gives you an ability to trade your long-term or short-term theory with a very drastic outcome, which won't happen unless you use a very high leverage, which could kill your position in the meanwhile. This gives you a unique financial product that is irrelevant of what happens during that position up to its expiry time. And if in the expiry time you hit that rate, you get an unproportional return on your investment. So this structure is risky on the other one side, but very beneficial on the other side. I think this is a great tool for a specific type of traders, not for everyone.
So you mean if someone basically entering the trade in the first seconds of these 15 minutes windows, let's say, where the the odds are 1% that it will happen, and your return is 100 times.
Yes, even less drastic. So even if they start at 50-50, they can do it in 1 hour, in 15 minutes, double the money, without the risk of the position getting liquidated if during those 15 minutes it went the wrong way.
Okay, yeah.
Maybe I can share something. I think it's really good for somebody of ecosystem player here, because if you understand how the prediction has actually been done in an upturn and a downturn, right? Because traders are naturally going after incentives, right? You ask me 4 days later, I don't care. I want it to be settlement right now, right? So likelihood is we will trade on things that is 15 minutes, 1 hour, 2 days, or no, sorry, at the end of the day, maximums. So if we go for short liquid events itself, what will happen is any upturns and downturns will be amplified. Right now, we don't have the problem because liquidity is very little. But this is a hedging tools. Along with any of the derivative tools, when we actually do this, more so for BTCs, which is already very volatile in the first place, I think the beta that we are talking about is going to be skyrocketed. And for that matter, that actually changes the very essence of the predictions. We are predicting something, but if we can gather enough liquidity, enough players to support in either direction, we can influence and corner the market, especially in low liquidity events. So I think this is really a big challenge for regulators.
Yeah, thank you. So we have a few minutes left, and as the last topic, I want to cover resolution of the prediction events, because it's another very important part, which is something new for prediction market companies. It's something which is not in brokers or crypto exchanges. There, basically, the resolution is done by your data. But in the prediction markets, sometimes you need to have the skill to resolve the event, and different categories need different skills. And you usually need to partner with third-party companies who are resolving the events with you, because you cannot be expert in anything. This is a well-known problem also with sports betting companies, that you have in-house people who are setting the odds and the resolutions for, I don't know, the most major sports like football, hockey, tennis. But if there is some, minority sports, you are usually just outsourcing the odds and everything to some third-party company. And if the better, it's someone who is really skilled in this sport and can predict it better, basically, than your data source, then he will probably outsmart you, right, as a betting company. I think that something similar can right now happen in prediction markets. There is probably a lot of insiders, people who are working within, for example, working in Google, and they know that Google will release some new software within a month. And there is a prediction event, hey, will Google release this software until end of June? And they can bet because they know. The similar example I have from my friend, actually, who is right now taking around $5,000 each day from Kalshi, because he finds out that in New York City, he finds out which meteo station is providing the data to Kalshi to resolve the weather events. What will be the temperature at 5 p.m. in Central Park in New York City. But usually normal people who are predicting prediction markets are using, for example, Apple Weather app for checking what will be the weather prediction in the New York City. But the weather app in the iPhone is using different metal station, which is in the different position in the New York City, closer to sea, where it's usually 2 times lower temperature, or 2 Celsius lower temperature than the second metal station, which Kalsh used for resolution. And he finds out this like bug or something. It's not a bug, you know. It's just the nature how the events are resolved, and he's making the money on it. What do you think about this? You know, do you have some take on it?
So first of all, this is a great story regarding your friend. Hopefully, this is not filmed. I'm joking. Okay. In my perspective, there are 2 different stories here. One is the friend that is a smart guy and takes an advantage of the data that is public to everyone. And this is how hedge funds operate. If they know to analyze data better than anyone else, they will make money. Your friend is one of those. There is a different side of people like working in Google. This is insider trading. They can do insider trading in stocks, and they can do it in prediction markets. They are violating the law. So this is the other part. Regarding the resolution of trades and the truth of resolution, which is also an important part, it works differently in a CFTC regulated environment and an on-chain product. CFTC regulated environment, there is a structure how it needs to be made. There is a regulatory environment how it needs to be governed, and not always it's perfect, but there is a control in place, and there is someone responsible to make sure it happens correctly. On the on-chain side, we use a more crypto approach. This is a democracy. There are a lot of people participating. They are choosing the resolution together. And you need to make sure that the whitelisted addresses that choose the resolutions are the correct ones, and there are not any majority attacks on that resolution pools, but the structure works. There are sometimes disputes, but overall, structure works. So I think both regulated and on-chain has a foundation to go forward. Last thing I want to mention regarding the odds, as prediction markets is a peer-to-peer product with market makers, we don't care. We want the audience, the people, to set the right price for the asset, for the market.
Yeah, so I think, I used to work in an exchange. We had listings, calls, and stuff like that. I think at the end of the day, it's still regulation, right? At some point, the exchange was just banning staff from just buying tokens because we know it's going to list. We can front run the transaction, and that kind of happens. Yeah, but once regulation comes in, I think it's going to be a bit more fair for everyone. At the end of the day, we decentralize so everyone has a fair share, fair equity, right?
Okay, so we run out of time. So thank you very much for the great discussion. Yeah, let's wish the great future for prediction markets.
100%.
And remember, we are still very early.